Hi, I'm Rusty Dornan from the Kaufman Fellows Academy, and I'm very happy to welcome our very first European VC to Venture Deals and to our Hangouts. Jan Habermann is with us. He's in Prague, and he's a partner with Credo Ventures, which is an early stage VC firm located in the Czech Republic. So let's just get started, Jan, and why don't you tell us a little bit about Credo Ventures and the kinds of things that you invest in?
Sure. First of all, thanks, Rusty, for inviting me. It's a real pleasure to be here with you. About Credo Ventures, as you said, we are an early-stage VC firm based in Prague, Czech Republic. We do invest in Series C and Series A in tech companies throughout the region of Central and Eastern Europe. We're a relatively small fund with relatively short history. We've been in the market for three and a half years. We've made 13 investments in the meantime, all of them in the internet tech companies. So that's our focus. Our sweet spot is around $1 million investment. Very quickly, a relatively small team, 5 people, 3 partners, 2 associates.
Okay. Well, we already have some questions from students about that want to know more about what you do in Europe. Is there a valuation cap for early stage projects in Europe?
Valuation cap? You mean that nobody would invest above certain valuation?
I'm not quite sure. Maybe we can get Alex Pinter when he comes on to why don't you answer what you think it might mean, and if it's something different, he can come back and go ahead and amend the question.
Okay, so if I understood correctly, I don't think there's any cap. I can imagine so sweet deal that the valuation can go really high. But on the other hand, I would say even though each venture capital deal, even in early stage, is kind of different, there's certain range that most of the investors as well as most of the founders would find appropriate. So I would say there's kind of range, and depending on many factors that cannot be precisely measured, which are rather subjective, you get to final valuation. So there are countless factors that each investor would consider when setting the valuation, but most of them would fall to a similar range at the end.
We had Alex come back to us and say, yes, that's what I meant. So we were on target with that.
Okay.
For the next question, what strategies for approaching VCs for funding? What are strategies for approaching VCs for funding? If your company is very early stage, pre-product, and you need funding to build your MVP?
Yeah. I think, and now talking primarily about Europe, we've got to a point when there's a lot of early stage focused capital available in the market, ranging from various accelerators, seeds, investors, including sort of kind of angels. So I think even at that stage, it should be relatively easy if there are certain factors met by the company or by the founders. And I would not say there's a guarantee that everybody has to raise, but if you follow certain very basic rules, meaning it's better if you get introduced than to make a cold call to an investor, which in these times should be relatively easy with LinkedIn, social media. Everybody knows everybody in the region. So first advice would be, rather than to cold call investors, get introduced. Second, get introduced to the investors that you know you fit in to their investment strategy. So there's no point in trying to approach a later stage life science investor if you've got early stage tech company. And if you follow these basic rules, I think you have a good chance to raise money, raise capital in Europe.
What is the biggest difference in the way that perhaps U.S. VC firms operate as opposed to Europe? Is there a difference? Is it just a perception? What do you see as the biggest difference?
Difficult to say. I'm not sure if I'm an expert on the US situation, but from what I know about US and how I perceive the European market, I would say there are some differences which primarily correlate with the situation in Europe, where we don't really have a European or Central European market. Rather, each country and each location is to a certain extent specific. And therefore, I would say we've got rather geography-focused investors in Europe than investors that focus on certain vertical throughout all Europe. Mm-hmm. It's not valid 100%, obviously, but there are some exceptions to that. But most of the smaller VCs like Credo and other that exist, especially in Central Europe, are more focused on their particular market or country rather than on whole Europe. So that would be one difference. I think for early stage companies, it's easier to raise money in the country where they have their presence and from which country they originate because of that, because the situation in each country is slightly different. So that would be one thing. The other thing, I think in the US, the deal flow, meaning companies or funders starting new companies, is much higher. I would say that US VCs have larger deal flow and they've got more companies to select from. In Europe, I think there's more capital available at the moment than companies that can actually be VC funded.
Are there, you were talking about doing it geographically. Are there particular clusters of VC firms in countries that are more vibrant, that you would say there's a lot of excitement around right now?
Mm-hmm. I think by far there's domination of the UK market. So London, I would call the European hub of startups and early stage. Obviously, Berlin recently has seen a tremendous growth, and there's a really vibrant ecosystem and community. So these would be two major spots in Europe. And then our region, which we call Central and Eastern Europe, there are several VCs like Credo that are trying to cover the whole region, but I have to admit that even Credo does not really cover all markets 100%. Because we are originating from Czech Republic, we are strong in Czech Republic and Slovakia, and trying to cover the other markets as well. But as a VC, you need to have a really extensive network to get to all deals and to be able to assist your companies in their home markets. And we're just all VCs in the region trying to build that network throughout the whole region. But as I said, it's rather country by country for the moment.
Okay, is there a list of, this is another student question, is there a list of online VCs in Europe by category? And if so, maybe you can email it to me and I can email it to the class, or if you have it off the top of your head, you can let everybody know.
List of VCs, I don't know about any. Obviously, you can check the association. So there's a European Venture Capital Association which lists its members, and there are national venture capital associations in most of the countries in the region. So that would be the source I would be looking for. The rest, Crunchbase comes to my mind, so I don't know about any official list. Okay.
Actually, we do have one that's on the class site, and off the top of my head, I can't remember what it was. I'll even send that to you because I'd love your feedback on it. That one of the students actually provided, but like I said, it doesn't come to me off the top of my head. We've got lots more questions, so let's go ahead and get to them. How do European VCs calculate valuations? Many factors can't really be measured at this early stage. Do you assume an option pool? If yes, how big should it ideally be for the seed stage and hence Series A?
Mm. I think I mentioned that in the beginning. The most important factor, obviously, is how much money the company needs. So if we come to an investment, potential investment, and considering to invest a certain amount of money at certain valuation, we start with the amount that the company needs to achieve the next goal, being it a product ready in the market, depending on the stage, or being a Series A financing. And from that point, we proceed to, if everything goes well, assuming for the financing rounds, how much stake we need to get decent return if the company succeeds. And at the end of the day, we more or less end up somewhere between, say, 10 and 30% of the equity, because it's crucial that the founders remain the major shareholders and drivers behind the company at this early stage. So at the end of the day, the valuation for early stage company is rather arbitrary. There are no sophisticated methods as far as I know. You cannot use discounted cash flows or stuff like that. So I would say it's the company needs and potential outcome for the investor to make the investor the returns that he expects.
Okay. On a downside scenario, when the invested company goes bankrupt, what are the major concerns on potential liabilities that a European VC investor should be aware of? How do you structure your investments to avoid liabilities?
I don't think in Europe there can be any other liability, as far as I know, than for the board members. I don't think as a shareholder in a limited liability company, unless you're really negligent, I don't think there's a real risk for an investor. So for us, it's if we're in the board, if we are board members, we really take care of the company, know what's going on there, and there's an insurance for the board members. So that would be the two measures. I think, as I said, if you're not negligent, there's not much risk for the shareholders.
Okay. Mark Andreessen recently tweeted about the concern with burn rates getting too high at startups, which will lead to companies, quote, vaporizing. Do you agree, and do you see that same thing happening in Europe?
I would say in Europe the situation is different, and you can see that on the amounts raised by US versus European companies. On average, I would say the US deals are much higher. The amounts raised by US companies are higher. So I wouldn't say the situation in Europe is same in this respect. And actually in our region, in Central Europe, that can sometimes be vice versa. That may be connected with less experience by founders from this region. What we see mostly in our region are first-time founders, so have less experience with building companies, and they sometimes even have problems to spend quickly enough because of, say, hiring delays or whatever problems they might have on the way. So on one side, that can be plus because they're not burning enough, so much cash. On the other hand, it can be a problem because their growth may be slowed down by this fact. So it's difficult to assess whether it's positive or negative thing. In my view, the extremes are always bad, so there should be some balance in spending versus the speed of growth.
In the U.S., having a founder who, startups fail, as a great deal of them do, and many in Silicon Valley see it sort of as a badge of honor that people have been there, they've done that, they've had the experience. Culturally, do you think European VC firms feel the same way? I mean, are they receptive to people who have failed in their startups, or is that something that they're not really fond of?
Well, I love to say that VCs are okay with that and actually perceive it as a relatively positive thing, depending obviously how the fail happened. But you're completely right that culturally it's different here. For instance, there are countries where failing with a company can actually be a criminal act.
Ooh.
So it's in criminal code that certain way of bankruptcy of the company, so the founder or the executive team of the company can be criminally liable for that. So I would say this is one of the culture problems we've got in Europe with trying to really build a startup that is taking a lot of risk and trying to build something extraordinary.
Okay. Another question from a student. You mentioned that you guys already invested in 13 companies throughout Europe. In which sectors were those investments? Which countries?
Okay. I hope I remember them all of them from top of my head. We had a security company from the Czech Republic, which was our first investment, and it was actually our first exit as well. So we were happy to make the first investment and good success with that company. We've got some edtech companies, one from Romania originally, the other one originally from Poland. We've got another security company, a seed investment from Slovakia. We've got a big data TV measurement audience company from Slovenia, and we've got some companies in compression, video compression from Czech Republic, and a company that is designing chips, actually making a software for designing chips from Czech Republic as well. So that would be the quick overview.
So you're mostly tech-oriented companies, then?
Yes, tech-oriented companies, that's correct.
Okay, next question. You've mentioned Berlin as the second startup hub in Europe. Do you see a lot of good investment opportunities coming from there?
Well, I don't, because Germany is not the market that we focus on. So I don't really follow the situation there in detail. So I just know the companies that are generally known, publicly known, but I don't follow the market in detail.
Okay. Would you mind sharing the size of the fund your firm is working with, and what types of investors do you usually work with? You might have answered that a little bit at the beginning, but perhaps to reiterate.
Yeah, the fund size is $25 million, relatively small fund, and we've raised from private individuals. Because it's our first fund that we raised with this team, we basically approached the people in our network, and these are mostly entrepreneurs who build their own companies, which are at the moment big enough, generating them enough cash flow, or who recently exited. And this is actually one of our advantages as well, that we've got 30 private individuals as LPs who can also help the companies that we invest in, who can help us with evaluation process, because they are experts in certain areas where we invest as well. So the fund is 25 million from private individuals. Most of them actually coming from the region, some money from abroad as well, but a smaller part.
How about this? Should founders in the US be looking to Europe as well as here in the States for funding, and what might those situations be?
Sorry, can you repeat? I didn't get it.
Should founders or entrepreneurs in the US actually look to Europe, European VCs for funding, as well as here in the United States, if it's the sector that they're seeking and it's a global, let's say it's a global company or vision?
It could make sense under certain circumstances. Obviously, if the US company wants to expand to Europe, so relation to a European VC could help the company with using their network, etc. But I have to admit that for most of the smaller funds like Credo or the other funds in the region, it's difficult to imagine that because we would not invest in a US company unless they have significant operations in our region, because we doubt we could add them a lot of value. There are some big VCs like Index, Earlybird, Balderton, who probably do such investments, but the situation with them is slightly different from where we are at the moment.
Okay. It's a little bit similar of a situation for people in Europe seeking to get investments from U.S. firms. They're not likely to do it unless there is a real reason, especially early stage, it seems like. Let me go ahead to the next student question. What were the main obstacles you've encountered raising a fund as a first-timer, and how did you deal with them?
The main obstacle was it took a very long time. No, I'm kidding. You have to, it's a very similar situation raising your first fund as raising for a company being a first-time founder. We were at the same position as founders raising for their first startup. So we had a compelling business plan. We had a team that we thought was okay for what we promised our investors. And for us, what we had to solve specifically was that most of our LPs did not have much previous experience with venture capital. So one of the obstacles that we had to solve was really explaining them in detail how venture capital is supposed to work, and what are the typical investment scenarios, and what should they expect, that the returns are not coming immediately, that they would have to wait, etc., etc. But the best comparison is really to raising for a first-time company. It's the same situation.
Okay. What is your personal take on liquidation preferences for key staff members in a startup?
Liquidation preferences for key staff members?
Key staff members, yes. Like the founding team, that kind of thing.
I'm not sure if I understand correctly. Liquidation preference as one of the conditions for the investment, I think it's quite standard, but there's a liquidation preference for the investor typically.
We could get Alex to also go ahead and, if he would go ahead and say a little more on this question, what exactly he means in terms of the preferences. I think he means, you know, however the founders have designed liquidation preferences, what do you see it as the best scenario? Okay,
so to me, and how we work with our deals, we typically invest in preferred shares having 1x non-participating liquidation preference if we're talking about a seed or Series A deal. And I would say this is kind of standard, and in early stage I'm not a big fan of participating preferences or more than 1x, because it kind of disqualifies or could cause problems to the company during the future rounds. So from my point of view, the 1x non-participating liquidation preference for the investor is a standard, and that's what we generally do. Okay. And in my view, founders shouldn't have a problem with that at all. I think that's kind of fair. So,
how do European VCs view ventures financed through crowdfunding methods? Is it popular in Europe, and do you know, for Series A, that kind of thing, do they like to see that a startup has engaged in that and perhaps had some success?
I think for certain kind of startups that makes a lot of sense, primarily because it's kind of a custom validation as well. I'm not sure about the general position of all VCs. From our point of view, I would say we're agnostic. We don't see many companies actually who went through crowdfunding. It's not the space we are really involved. It's much more for much more typical for hardware companies than for software or service-oriented companies. But if we came across such a company where it makes sense, I would say it could be a positive point for the company, and we would not have any objections. Rather, we would say, yeah, good way how to validate your product in the market.
What do you think causes the most misunderstandings for first-time founders around capitalization tables? What do they? Is it valuation? You know, what is it?
I'm not sure if I heard the full question.
What causes the most? You know, for first-time founders, do there end up being some misunderstandings about cap tables and how they work and valuations and things like that? What do you see as the most common misunderstandings for those first-time founders?
I would say I saw both extremes in our region. One extreme is that some of the founders can be kind of obsessed with ownership, and they don't want to give up equity almost at all. So they're used to have their small baby. They used to be 100% owners in the team, and they just cannot get along with the situation that they have to give up part of the equity. And the valuation is kind of too important for them, and they cannot imagine that smaller piece of bigger company, which is valued higher later, could be more valuable for them than a bigger piece in not so successful company. So that's one extreme I saw in the market. The other extreme actually is that we came across recently we came across several companies who got seed financing by some angel or sort of seed investor, institutional seed investor, where they accepted an investment at a range, say, $100,000, relatively small seed investment, and they gave up majority to the seed investor, which is obviously nonsense. If the company wants to raise further capital in further rounds, this is really disqualifying. No institutional investor could invest at that situation. So I think this is kind of inexperience of the founders, and my advice here would be just, again, don't go to extremes, either extreme. Look at what's standard in the market, and if the terms you're getting from the investor are more or less in line with the standards, you should be okay. If there is something you don't find in a standard term sheet on the internet, just ask why is that so, and don't sign such term sheet unless you're comfortable with the answer.
Okay. What are the usual exits for your invested portfolio? It seems like follow-on investors have the preference for cash to stay in the companies than repaying earlier investors. At the same time, waiting until the IPO might be a bit too long for your fund.
I would say our typical exit scenario is a trade sale to a strategic buyer. So that's where what we plan mostly if we're considering exit options. And obviously we'd love to go for IPO, but in the region where we invest, this is rather rare. There are not many successful IPO stories, but there have been some. In Czech Republic particularly is well known thanks to its security business. 2 out of 5 major security companies originated in the Czech Republic, AVG and Avast. So, and AVG made their IPO. Avast didn't make an IPO yet, but made a substantial further rounds. So it's possible as well, but it takes time, but we would be okay. Our fund is long enough, so typically we would go for a strategic buyer, but IPO is an option as well, and we're okay with waiting.
Okay. Final question. How do you manage to finance a team of 3 partners and 2 associates with a fund this size? What do you think of the rule of thumb that you need roughly 20 million US per partner to be able to finance your team?
I would sign it, and when I compared our situation to a startup when fundraising, we're in the same situation all the time actually because of a relatively low fee. So we're just waiting for the carried interest, and all partners just accepted that as a risk because we see the potential in that. So that's a good point. We're living on a shoestring, and we're just trying to survive and waiting for the carried interest.
Okay. Jan Habermann, thank you so much for joining us. We had some great questions today. There might be a few more. I can get folks to go ahead and go into the forum for this hangout. If you have other questions, I can pass them along to Jan. But really appreciate the time you've spent with us, and hope you've enjoyed it.
Thanks, it was a real pleasure.
Okay, take care.
Bye-bye.